All right, guys, welcome. If you're new to the channel, we're going to go through these stock charts. Typically, I just jump right into it, and that's what we're going to do. So, NASDAQ futures. We've got this bull flag. I can see that we made this bull flag right here. This is just really narrowing it down into kind of the short term, what's going on. But everyone that watched my previous videos knows that I'm expecting this rally that we've seen over the last day and a half basically to be kind of a dead cat bounce. So I think we're heading lower, and I think we're going to undercut the recent lows that we just made, back here on the 8th a couple days ago. And I think that this was just a dead cat bounce. We fell. Here's an impulsive leg. We had a little bounce. I think we're going to start to roll over. But we started to make this bull flag right here. And this is interesting. You can see this breakout right here. And this breakout looked like it was going to be a continuation of the flag. So here's your flagpole. There's the flag. And then if you broke out, you would expect to continue, maybe run up to somewhere around 11. Well, actually, if I mark it out, depending on what we broke out right there. So that was about 11,774 on the futures. And that was the projected target. However, it was failed. Basically this bull flag was foiled. It came back down and went back into the flag. So that was a false breakout on this flag. So to me, continues to show that I think that this bounce that we had is just about over. Now I was expecting us to potentially run all the way up and tag this trend line. And if I roll out on the hourly, you can see I've got this trend line, and I do need to clean my chart up slightly. But what everyone needs to focus on really is just this uptrend line right here. And I thought, okay, we could easily come back and do a back test. So that would be an area that you could basically short or add to shorts. But looks like it's going to potentially fall short, because here's where they had the opportunity to make the run up to that, to do a back test. And they stepped in early and started to sell it. So in general, looks weak. Same with ES, the S&P futures. Here's your breakout right here, but then it was foiled, sold off early. So looks bearish. Here's SPY. SPY starting to roll over. So if you look at the daily, you can see, really this was your former peak right here at it's about 338, 339.50 right in there. And we came back down, recovered it, but we're starting to head back down. So daily close below this level to me says that that's probably the end of the bounce, and we're going to make another leg down. And you could even say that this is a bear flag on the daily chart. We're starting to kind of flag out, and another leg down would be something like that, putting us in the, maybe around the 320, 319. Maybe we'll undercut it down to 312. Somewhere in that area is a rough projection. We'll just evaluate that as it comes. Qs is really where I'm more focused on the Qs, because Qs is really where the entire strength of the rally this year has been in. And so I'm waiting, I'm looking for continued signs of weakness in the Qs, because the rest of the market has not really been that strong. And so without the leadership of the tech sector and the FANG stocks, I just don't think you're going to have much left in the market to keep this thing propped up. So what am I focusing on in the Qs? Well, a couple things. We had this uptrend line right here. This was your sell signal, a shorter term sell signal. We found that on the hourly chart. You can see it right here. This was the uptrend line I was pointing out on the video. We had an impulsive breakdown and we sold down. So that was your initial sell signal, was up in this area, 295, right around there. And then we had longer term support right down here at this trend line right here. Well, we've broken that, and that's on the daily chart. So here's your trend line. Really the rally for all of 2020 is based on this trend line right here. And we broke that just recently. So that was your daily sell signal. So now we now had a sell signal on the daily chart, which says that, when you get a sell signal, the trend doesn't usually end with the beginning of that sell signal. That's usually the beginning of the trend potentially on this daily chart. So what we have seen here is kind of that bounce or that washout move, trying to, flake everybody off who took that daily sell signal. And so they run it up, but then you should see the continuation of the downtrend. So we have price channel running down here. I think we're heading down to this 260 area, 258, 259, 260, somewhere right in there. I think that's the next target, next level of support. You can see we had that level, this trend line that I have right here. You can see on the daily, we had a reaction on it here. We had a reaction here. Then when we broke out, we held it as support there and as there. So I would expect to get a reaction, some sort of reaction when we hit that, or if we hit that. I think that's where we're going, though, in pretty short order. And if I narrow it down to the hourly, just to get kind of a micro call, you can see ran up. We came close to tagging that trend line, but they stepped in early. So far, the sellers have stepped in early, and we didn't do a full back test of that trend line. So you have to read that as bearish. Usually when you can't reach a trend line and actually do a full back test and they step in early, that just shows a lot of people were waiting to either exit long positions or short, and they stepped in, trying to front run each other basically. And so that's bearish in general, how I read that. So we've got broken trend support, rejection at that, rejected early basically. So again, 259 I think is next up. Small caps, I'll run through this really quickly. Again, I think from my perspective, I think most of the action is going to take place in the tech sector and the Qs. But small caps, you've got this price channel, this kind of range we've been in, the low end 145, the high end about 160. And looks like we're just doing a bounce. We're going to head down to 145. That's where I think that we're going in the small caps. Gold. So I adjusted my trend lines just slightly because I've now got this third reaction right here. You can see we've got this triangle, this kind of compressing price action that we've had, but we have a reaction up here at the high. We had a reaction here, and then just today we got another reaction, kind of a cluster right in here. So that's three. So we'll say this is our upward trend line for now. And then at the bottom we've got reaction down here, reaction here, reaction here, another one right there. Here we undercut it slightly, so false breakdown on that one. So in general, this is compressing, looking to make a move. It can break out and go higher or down. The dollar, though, is holding. You can see we came down on the dollar and held this trend line that I had marked out, and we came down, tagged it, and we're bouncing off of that. So we're holding. Dollar's looking like it's potentially going to, start to move higher. Cover these in case anyone's following along. PAAS. So we have resistance right here at 36.20. That's where we created this gap back here. We've tagged it 3 times now. So you can see tag there, overshot it there, overshot it here. But when we overshot it right here, you can see that the wick, it basically at some point in time during this hourly candle, the price action was up here and they faded it and sold it back below resistance. So that's bearish. When you read that, that shows that it couldn't break out. It was a whipsaw, and this is now heading lower. So bearish in general, that's holding as resistance. Now a close above this and, we start to turn bullish on this and it could potentially move higher. But as of right now, we had a false breakout and it's going lower. Quick sector analysis here. XLV, which is the second largest sector in the S&P 500. So important to know where this one's heading. And you can see we had an impulsive leg down. We're flagging right now. This to me just looks like a flag on the daily chart, something like that. So here's your breakdown. Here's your flag pole. There's your flag. Depending on when we break down, maybe it's a projected level of something like that. So maybe it's going to put us in the vicinity of this candle right there, somewhere right in there around 101. Somewhere right in there, I think, is where the next move down is going to be. Then maybe we'll consolidate. But ultimately, I think we're heading down to this 97 area here on XLV. XLF, moving on. Still hanging in there, but below support, and continues to trade, continues to be rejected at resistance. So here's your March rally for 2020 on XLF. We broke. We did several back tests. We're now starting to break down and starting to move farther down, and potentially, starting a new trend to the downside, essentially. XLK, tech sector without Amazon. So this is just like the triple Qs, but without Amazon for the most part. Uptrend line right here. We broke down, did a back test. They're starting to sell it. It looks like they're stepping in early and selling it right there. So couldn't quite get a full back test up to this 119 area. They stepped in early and they're selling it down. Now this could continue to chop around and back test, or maybe we'll actually have a full back test at some point, tomorrow or next week. But as of right now, they stepped in early and are selling it down. So we have to continue to read it for what it is, and we have a break of trend, and we had a back test that they stepped in early and started to sell it. Tesla, I know several of you are interested in Tesla. I'm interested in shorting Tesla. Nothing behind the fundamentals, just the technicals. But here's what we got. Here's your uptrend line, the daily. We broke down, nice impulsive breakdown. We have the secondary uptrend line that's somewhere right in. It's right about there, and that's kind of rough. But if I go to the hourly, we can mark it out a little bit better. So yeah, it's somewhere right in there where we've got reaction here, reaction again here, a little bit of choppiness right through here, stopped right on the dime right there and gapped up. So that showed an impulsive Anytime you see an impulsive reaction, it helps validate a trend line. So we stopped and then gapped up and ran higher, and then again stopped right here. But I've got resistance that's sitting right about 387. And today we popped over it, and we've been selling since we popped over it. So the resistance comes from, back here it held as resistance. Then it was support right here. Again, it held right there. And then we gapped down below it. So to me, that looks like a kickback rally. Looks like we're heading back down to the trend line right around 341. And I think the second time that we get here, we'll slice through it. And so where's Tesla going? If Tesla's going to break down here, we've got a couple gaps. I think those are great targets for Tesla. So right around 244 is your first gap. And then we've got another gap at 220, about 224. So I think we'll probably slice right down to this 224 and get a reaction right there. That would make sense. And then after that reaction's over, if we continue to move lower, we've got a gap all the way down here at 131. So I think that is probably the ultimate target, would be 131. And I'm looking to trade that accordingly. Adobe looks like it's heading lower. And Adobe, we've got this uptrend line that we've been in since March. We broke the uptrend line right here. And we had and it was an impulsive breakdown, nice strong sell-off, and then it came with a gap down and sold off. But it didn't, we've been back testing since, basically. And so we back tested once here, and then a full back test again right here, a nice impulsive back test. And then we've been moving lower really since that back test. So you can see right here, you haven't really, if you shorted at the back test of that level, you really haven't been underwater since you took that position. They popped it a little bit right here, but the day still closed right at that level, and it then impulsively sold down. So that's why, these are objective levels when you have back tests. And so to me, it looks like we have a kickback rally right here, and we're going to head lower, probably down to this 410 level is the next objective target. We'll wrap here with XOM, ExxonMobil. Continues to look weak. And to me, this doesn't look like a false breakdown. To me, this looks like a continuation of the downtrend. So if I look at the weekly chart here, you can see To me, it looks like bear market basically. And this has been in a bear market. You know, here's the highs back in August of 2014. But I think we're setting in for kind of a longer bear market in this thing. You've got nice first leg down. You had the kickback rally or bear market rally essentially, and now you're continuing the trend. So the trend in this stock is down really since 2014. The trend has been down, and rallies are bear market rallies. So that's what this looks like. Looks like we're heading lower. They haven't cut the dividend yet. I suspect at some point they're going to cut the dividend, and when they do that, you'll see a big impulsive move down, and that might be the end of the. You might get a short-term low after they cut the dividend. So we'll continue to watch this thing, but levels to watch. A recovery of 41 would be bullish, because that would mean that all this price action down here was a false breakdown. So if you can recover 41 on XOM, I definitely would be interested in being long if we got a nice close, probably on the daily chart above 41. Then I would expect that this thing actually could go higher. Until then, it's bearish. Looks like it's heading lower. Here's volatility, UVXY. This looks like a decent area to potentially start a volatility position if you haven't already started one. This is what I'm probably going to start a volatility position again. I caught this first rip here, sold my volatility, looking to potentially add back, and this might be the next big move coming. Will be in volatility. To me, this looks very similar. I don't have it marked out. I'm going to have to mark it out, but it looks very similar to something. Well, it doesn't quite show on this chart, but we had it doesn't quite show that clean. I'll have to do a little more homework, but basically you had the breakout, you had the kickback rally or back test. This thing could easily fall all the way down to this trend line right here, down to 18 or so, and do a full back test, or they might just step in early and buy it, and then it's going to, make a run, potentially up to like $50, 49 or so. Again, I usually don't hold on to these things for the entire run, but you do see a level right there at about 50. So maybe if we get up in that area, it'd be a good area to take some profit or raise stops. You could always raise your stop loss and just let it run. But yeah, that's what it looks like it's going to do here shortly if tech keeps selling off. And here's tech starting to continue to sell off. So we'll see if this picks up steam into the close and we close at the lows, or if they get some sort of kickback. But in general, I think the market's going lower. So that's my read on it. Thanks for following along.